I'm creating this video with a lot of responsibilities because I'm a father of two daughters, and like every father, I want to give my both daughters the best of the education possible, and for that we need a smart investment plan. As you know, nothing in this world comes free. So if you're a father, mother, uncle, aunt of a girl child or know someone who is, please watch this video and also share this video with them, because in this video I am going to talk about Sukanya Samriddhi Yojna, nitty-gritties of this scheme, as well as we will compare this with the mutual fund returns and understand which is a better investment plan for our girl child. Without even wasting a single second, let's get this video started. Let me first explain to you the nitty-gritties of Sukanya Samriddhi Yojna with an online calculator. What you see on my screen is an online calculator. I will provide the link in the description, so don't worry about it. So first thing is that if you look at it, if we invest every month 12,500 rupees, the reason I have selected 12,500 rupees is because that comes out to be yearly 1,50,000 rupees. And as per Sukanya Samriddhi Yojna, if you do investment of up to 1,50,000 every year, this money will be completely tax free. So that's the first benefit you get. So let us say every year you are doing 12 deposits, which means every month you are putting 12,500 rupees in this scheme. The way Sukanya Samriddhi Yojna works is that you do this investment for 15 years, okay? And you stop after 15 years, but your money still earn interest after 15 years. And at the age of 21 of your daughter, assuming that you do the investment at their birth, they are going to get the matured amount. And if you look at the maturity amount at the age of 21, for them it will be 63 lakhs 80,000 rupees. So maximum investment allowed in Sukanya Samriddhi Yojna every year is 1,50,000 rupees. That is the max cap. If you invest more than this, then you're not going to earn any interest on that. Okay, so 63 lakhs is what you will earn, and you would have invested total 22 lakh rupees roughly, and you would have got a capital gain of roughly 41,29,000 rupees roughly, right? Now there are few nuances that I want to quickly explain about Sukanya Samriddhi Yojna before we compare the returns with mutual funds. First thing is that in terms of the withdrawals from Sukanya Samriddhi Yojna, you can withdraw this money at the age of 18 year of your girl child, or when they complete their 10th standard, whichever is earlier. So that is the provision that is allowed. But you can only withdraw that money for their education purposes or wedding purposes, which is at 21. So you will have to prove that your girl child is taking admission in a school or a college after standard 10th or after age of 18, whichever is earlier, right? Second thing I want to talk about is the interest rate. So 7.6% is what this calculator assumes. And if we have a look at the interest rates here, what you will see is that in the past, if you look at from year 2014 onwards, the interest rates have been fluctuating. It used to be roughly 9.1% at the time of around 14-15, because at the time, overall interest rate in the economy were very high. Now, if you look at the current interest rate, the latest one is 8%. But if we go for the lowest rates, it has been 7.6% in the last 8 years. Can it go down from here? It is possible. Can it go up? It is absolutely possible, right? But for our calculations, we are going very conservative here, and we are going to consider 7.6%. So let us assume you do the investment today and you're going to earn the 7.6% interest overall for the next 21 years. Therefore, you are going to get this money, which is 63 lakh rupees as the total maturity amount, and your capital gain is going to be 41 lakh rupees. So this is Sukanya Samriddhi Yojna. Let us now jump into comparing this with the mutual fund investment, understand how much of return you're likely to get from mutual fund, understand the capital gain tax that you will have to pay. One important thing that I forgot to mention here is that the total capital gain here, 41 lakh rupees that you've earned, is completely tax free. You don't need to pay any tax on this. This is all your money. That is the beauty of Sukanya Samriddhi Yojna. While when you invest in mutual funds, you will have to pay capital gain, that I'm going to talk about it now. So far, if you're liking this video, please press the like button. It will allow YouTube to share this video with more and more people, and more people will get benefited. Let's now get into the details of comparing Sukanya Samriddhi Yojna with the mutual fund investment and which one is better. What you see on my screen is, first thing is that I've taken the capital gain that we saw in the previous screen to be 41 lakhs 29,000 rupees. So if we compare that and put it here, it means our objective is there a better mutual fund investment plan that can give us better capital gain or better profits than this 41,29,000 rupees. That is our objective, right? Do not worry about the spreadsheet. I will try and simplify this in a very, very simple language. Just give me a few minutes. If you look at this here, I've assumed ELSS mutual fund to start with. It doesn't mean that you only invest this money into ELSS mutual fund. The reason I've selected equity linked savings scheme ELSS mutual fund category is because ELSS mutual fund category gives you the same tax benefit as Sukanya Samriddhi Yojna, wherein you can invest up to 1,50,000 rupees every year, and that 1,50,000 rupees become totally tax free from an income perspective. That's the only reason I've selected ELSS here, but you are free to select any other mutual fund that you think is useful, because remember, you are investing here for 21 years. It is an absolutely long period. Your risk in stock market or equity mutual funds is very, very low because of this long duration, right? Having said that, I've taken 4 scenarios here because nobody can predict the returns that ELSS mutual fund or any other mutual fund category will generate over 21 years. So I've assumed here, first scenario, that let us say you get 8% annual returns, second is 10%, third is 12%, and finally 15%. So worst case scenario, you will get 8% returns given the past history of mutual fund returns, and best case scenario, you get 15%. You might get more than 15%, but I have restricted myself to 15% here. Now, if you look at the calculations here, it is going to be slightly complicated. So please pay attention now. Let us just go back to this scenario. What we did here was 12,500 rupees is what we were investing every month for 15 years. And after that, we were stopping our investment, right? Exactly that is what we will do in the case of mutual fund. So if I go to a mutual fund calculator, I have calculated if I invest every month 12,500 rupees and for 15 years, if I assume 8% returns, which is our column B here, 8% return, then what is likely to happen is after 15 years, I'm going to have 43 lakhs with me as my corpus. So that 43 lakhs will be in the mutual fund invested, right? After 15 years, I will stop doing SIP, and this 43 lakh rupees now will earn more money, earn more interest up to 21 years. So now we need to do part 2 calculation, which is how much of this 43 lakh will become after the next 6 years, which is takes up to 21 years, right? If it is going too fast, please pause the video, go back and watch it. The calculations are slightly complicated. So if I come back and invest this 43 lakh rupees now for next 6 years at a rate of 8%, how much money I am going to get? So if I come back here and look at this calculation here, I have invested this 43 lakh 54,000 rupees with an interest rate of 8%. For the next 6 years, my total wealth will be 69 lakhs and I will gain 25 lakhs of capital gain. So there are 2 parts calculation here. In part 1, we had the capital gain of 21 lakhs, right? And in part 2, we are going to have a capital gain of 25 lakhs, right? What I've done is I've taken the capital gain of 21 lakhs here and 25 lakhs here, right? So these are the 2 capital gains I'm going to get from 0 to 21 years. All right. That will give me total capital gain of roughly 46 lakhs if I assume 8% returns. Okay. Now there are 3 possibilities here. As per the current taxation valid for equity mutual funds, it will be taxed at 10%. Right. So 10% of this 46 lakh rupees, you will have to pay long-term capital gain tax. Right. So that will be that your 46 lakhs will reduce to 41 lakh rupees. Okay. Now in the next 21 years, what are the chances the government is likely to increase the long-term capital gain taxes on equity mutual funds? I think there is a fairly good chance that this 10% might go to 20% or 30%. Therefore, we need to provision for it and understand what will it be if we go for 20% or 30%. So if we go for 20%, then from 46 lakhs, roughly 9 lakhs will be paid into the taxes. That is a lot of money. So 37 lakh rupees is what you will be left with in terms of capital gain. And if it goes to 30%, then we are all doomed. It will be only 32 lakh rupees, right? So the worst case scenario is that your mutual fund returns are 8% every year for next 21 years. And then you are paying 30% capital gain tax on it. That will come out to be 32 lakh rupees. And please be aware, that is far, far lower than the Sukanya Samriddhi Yojna. You are better off with the Sukanya Samriddhi Yojna. Likewise, I have done the calculation for 10%, 12% and 15%. If you want this calculator, please let me know in the comments, calculator. I'll be happy to share this with you, and you can play around with the numbers and you will have all the formulas ready for your calculations. If you look at the 10% here, you will see 63 lakhs, 56 lakhs and 49 lakhs respectively. If you look at 12%, you will see 91 lakhs, 81 lakhs and 71 lakhs respectively. And if we calculate at 15%, then it is likely to be 1 crore 55 lakhs, 1 crore 38 lakhs and 1 crore 21 lakhs. So the best case scenario is your mutual fund generates 15% returns annually for the next 21 years and you only pay 10% capital gain on that. That will be 1 crore 55 lakh rupees of profit. Please know this is just a profit or capital gain. That will be almost 4 times than what Sukanya Samriddhi Yojna is giving you today, right? So you can see that there is a wide range of returns that you're likely to generate. Now you will ask me, Rahul, what is my personal recommendation? Because I spent a lot of money, lot of time doing the research on investments, I'm fairly confident that I can be in this bracket here. Okay, my mutual funds will either generate 12% or 15% or somewhere in between. So my preference here is that I am going to be generating between 71 lakhs to 1 crore 55 lakh rupees of capital gain when it comes to investing in a mutual fund versus the capital gain I will get from the Sukanya Samriddhi Yojna. So from my perspective, I'm going to go with mutual funds, but again, decision is yours. All I've done is I've shown you the calculations to make sure you make an informed decision. Second important point that I want to make sure you understand is that in case of ELSS, your money is only getting locked for first 3 years. Okay, you can withdraw this money anytime. This could be good thing, this could be bad thing. Good thing that if you need money for some other purpose, you can withdraw it. Bad thing is exactly the same, that if you need this money for some other purpose, you're going to withdraw it. While this money should be ideally kept locked for your daughter's or your girl child's education purpose, right? Good and bad depend on your personality. So from a liquidity perspective, mutual fund is far better than locking your money into Sukanya Samriddhi Yojna. But if you do not want to have ups and downs in mutual funds, you want guaranteed assured returns, then Sukanya Samriddhi Yojna is for you, because you still will get decent money with you when it comes to long-term investment. That's all I had to share in this video. I'm sure you will have a lot of questions around Sukanya Samriddhi Yojna scheme as such. Please drop them in comments. I'll go through as many comments as possible, give you answers for each one of them. Also, please know that if you want to go ahead with ELSS mutual fund, on my YouTube channel, you will find a full video on the best ELSS mutual funds for this year. Please go ahead and watch it. It will be really, really helpful. And overall, if you like this video, please give it a thumbs up. Let me know in the comments if you like this video, because that's how I know that you're liking the video. I should continue to make such videos, or I should stop making such videos. With that, I hope you have a good day. Keep rocking.